Good morning, guys. Welcome to this Tuesday, February 11th, and holding pattern again. Kind of backed off a little bit from yesterday's day session high, but not a whole lot. Still, just kind of twisting in the wind. I think we have news coming out. So we have CPI, PPI, and coming out on Wednesday, Thursday, and the retail sales on Friday. Today is absolutely nothing happening. The only thing we've got going is really Jerome Powell speaking at 10. So 10 o'clock, Jerome Powell. Watch for that. That could certainly set things off. The small business optimism index was a bit to the downside. It was 104 before, it's down to 102. I'm not sure they're marking a big reaction on that one. Not big reaction on that one. But anyway, so that's the only thing we have in front of us today. Jerome Powell at 10. Otherwise, it's like a no news Tuesday. Then tomorrow we get news. We got Powell again at 10, but they have a CPI number come out at 8:30. So give me a little bit of action tomorrow. Today, though, you never know a day before news that the market may correct itself or adjust itself. So, but I want to start off. I had no reason to think it's going to, but if it does, we know what to do. It's at this point, they're going to start off range bound. We're still just trading in this range. We're holding above the 6,040s. Right now, it's about the 6,020 to 40, this support area. And as long as they do and they stay in this range, as long as they don't start trading below that 20 level, 6,020 level, I think we are still in good shape to hold this range and potentially take it higher. So there's so many cross currents out there right now. It's every day there's something new tariff-wise or tariff-wise or something like that happening, and you just have to be on your toes for sure, on your toes. So I'm going to start off range bound on the ES, looking to buy weakness at this point against 65, 60, 65s, the 50s, the 40s, 30s down to the 15 to 20s here for rotations back up. So that would be basically buying all the way down to that support area at the 20s. If they start taking out that 20s, then we are in some trouble. If they take out 6,040s, I would just be a little bit less aggressive on these 30s and 20s, just because it could be it certainly could be on in a directional mode at that point. I just would be a little bit I would be paying attention to where I'm entering it, because I would probably be looking for a short there if it starts taking out the 40s for a run down to the 30s, maybe a run down to the 20s. So it could be short setups in between here. Just have to be mindful, as I always say, don't sell into support. Don't sell into the 40s or the 30s or the 20s. Sell when they start taking out those levels. All right. And so initially looking to buy against the 60, 65s, the 50s, the 40s for rotations back up. Below the 40s, a little bit less aggressive, but still looking to buy against the 30s and the 20s. All right, below 20s, bets are off. I think we may be heading lower. So that's on the downside. If it starts trading higher, looking at if you start seeing some early strength, we'll be looking for short setups against the 75s, 85s, and 95s up to the 6110s, same as yesterday, same levels exact as yesterday. And if it starts taking out the 10s, yeah, then we are in a direction and move to the upside. We start leaning in on the long side. You see that nice volume edge right here. If that comes out, they start taking that out, I think we have a shot at trading back up again. So the fact that we have no news to drive the market today, it's Powell could certainly create the news, but if we have no scheduled news, they're going to start off range bound. So looking to sell against the 75s, 85s, 95s for rotations back down. Last one would be the 6110s. And looking to buy against support 60, 65s, 50s, 40s. Below the 40s, a little bit less aggressive, but still looking to buy against 30s and the 20s. And that would be consistent. We are trading in this big range here from the 6110s down to that 6020 area. And we're pretty much in the middle of that. And then we'll see if they start trading out of that range for some reason. And we've seen that before. Days like it's like a completely no-news day, and the market just start taking off in a direction. It's like, okay, what happened? It takes you by surprise. But you kind of had to wait for the market to show you what it's going to be doing. So, with a day like this, likelihood is we're going to get a range-bound day probably staying inside this range. At least that's how we get started. Then we'll have to adjust if it changes. When it comes to the bonds and the Nasdaq, bond market backing off a bit. So they have taken out 115. We are back in that lower range again. So that's kind of yields are kind of creeping up a bit. So capital flow in the bond market, you can see we had a pretty nice move. This was like this flight to safety move on the tariff stuff, and the tariff on Mexico, Canada was talked about. Remember, those just paused for 30 days. They'll come right back up again, and they'll come up with the at the same time as we have these government shutdown discussions coming up as well. Remember, they just delayed the whole thing till March, mid-March or something like that. And then we're going to talk about debt ceiling and government shutdown and tariffs, and everything's going to happen in March. It could be pretty interesting. However, looking at the bonds, we are back down below this edge, the 115s, and I think we may be heading down to the 114s. So it looks to me like we are heading lower. So looking to sell strength at this point. The 115, the 115.06s for rotations back down. If they trade up above that 116, so 115.06 edge, I'm thinking I'll take off the short bias. So fairly aggressive on reversion if this is just a probe to the downside. But chances are, if they can't get up above these two areas of resistance, we're heading down to that 114 attractor. It's going to be right down here. So that's kind of the way I'm starting out the bonds. But yields slowly drifting higher. So that's kind of what that is. On the Nasdaq, I'm looking at pretty much a range-bound market, but they are still bouncing up against this upper edge. We had a pretty good probe to the upside. They took out the edges. They were up here, up against the 880s. Now they're backing down a bit. So now they're down below the 800s. So yeah, okay, fine. Haven't quite failed yet. So at this point, I mean, as I said yesterday, we had this potential for, remember that head and shoulder pattern, this shoulder, head, shoulder, and potential a triple failure, and then head backing down. So this could be the start of them backing off a bit from this upper edge, at which point probably going to run it down to the 21,500s, maybe even reversing it all the way to that lower range at the 400s. Now we don't really have to worry about the short side until they start taking out the 350s or all the way down to that 200 edge. So this area when it starts getting really gnarly on the Nasdaq. But at this point, I would start off range bound. Still looking for potential moves to retest this high, see if they can take it out. They haven't quite backed off enough for me to start thinking the failure is upon us. The overnight, we'll see if the day session can trade back up again. But I would be looking at potential short setups against that 780s, 830s, up to the 880s for rotations back down. I'm looking for that failure to take it out. The only thing is like the fourth time they start testing this upper level, if they get that far, chances are they could bust through it. So that's what we are up against on the Nasdaq. But in the Nasdaq busts through this, I think things open up to the upside. I think there's definitely a move to the upside happening at that point. So those are the two options we have in front of us. But I would be looking to trade the failure to take out this area. I'm looking for early strength, 780s, 830s, probably the better ones. If they start taking out the 830s, chances are they have a shot at testing 880s, potentially taking out this upper area. But if you get enough strength to run up and test the 780s and 830 or 830s, and then looking for a failure up there, that could be a nice setup. If they get all the way up to 880, I'm still looking for a potential short there, but it's just maybe a little bit less aggressively. That short develops, could be a nice move to the downside. Still just range bound, trading in that low range, but at this point, that's what it looks like for Nasdaq. So slight range bound, slight bias to the upside just to get started. Let's see if they can hold it. If they don't start taking this higher, but just start backing down again, I'm just going to go back range bound. I'm not going to take off the long bias pretty quick here. If they trade below that 730, the London low, I'm just taking off the long bias and going back range bound, looking for a retracement back to that 500, 21,500 level. All right. So on the way down, looking for buying opportunities against support, but not very aggressively. I'm thinking that when they start backing off, I think they can certainly run it all the way down here to that 580 or the 540s pretty quick. And so it could be a nice short move here. You just never know when they're going to hold it, though. So, I mean, just be mindful that you don't sell into a support area. And if you're in a trade, those support areas provides you an option to get out as well, take your profit. But anyway, so looking for moves down to that 500 if they can't scratch back up again or they start failing from the get-go. So that's the NASDAQ. Finally, oil and gold. And gold is literally melting down, pardon the pun. But look at that guy. This is crazy stuff. I mean, this is absolutely surprising, you know. The gold is doing this. There's definitely stuff going on the gold side of things. Look at that. They were up in the overnight. I watched them running it all the way up to the 2967s. And I'm watching it think, oh crap, this is something is going on when that is happening, right? So I'm watching it and this is just volatile and all over the place. And in the London session, I start taking this lower. And then I start taking out the 2925s, the 2120. So fine, we're on the short side of this now. So they are retracing pretty hard on gold. We'll see how far they can take it, but this is a market which is going to could be really good to trade, or it could just run you over, blow up your accounts. So at this point, starting off on the short side, they're taking out my key support areas already this morning. So I said I was going to start range bound with a bias to the upside if they took out these, unless they took out these 25s and the 21s, and they did right before I even start talking. So now they're back down, heading retracing this, and chances are, I mean, if you look at where we are right now, if they start taking out that edge 2905 and 2900 to 2905, we're definitely heading back down to that 2880 level. So at this point, starting off on the short side, at this point, looking to get short against the 15, 16s, 21s, and the 25s, so rotations back down. If they trade up above 25, that volume edge right there, not a strong one, but it still shows up pretty well, back range bound. But at this point, starting off from the short side, and see how far they can take it on the downside there. Please manage to right click by mistake there, split that one out again. So looking for retracement. They always retrace this all the way already. So watch that test now. They already took out the 2910, 2905 here, that support area. That comes out. We are going to be right back in this lower range again. The gold, major move. Look at that thing. I mean, this is, you can get on a trade like that. This big bar is what? 19 up to, or 20 up to 20, that's $60 this bar. That's big. So you can imagine, pretty freaking volatile. I would be very cautious trading this thing here. I'm trading with a 40-tick stop. So this stuff here is barely tradable. I mean, I had to basically hop on when it starts retracing on an intra-bar scenario, get closer to that upper edge, just try to get short and hope they don't pop a little bit or sneeze, because then you're out. That's how bad it is. So anyway, gold melting down, pardon the pun. We'll see how far I can take it, but that's interesting. So I have still not seen a good explanation why gold is so volatile. If it's just the tariff concerns, geopolitical stuff, spooking the market, but it's driving it higher like that. But it's definitely something going on the gold side of things. Maybe people are hedging in a big way or something. I don't know. Finally, oil. But trade gold from the short side right now. We trade what we see, and but when it moves like this, it's just kind of concerning. It's a lot of movements. Oil. Trade that from the long side right now. It looks like the tariff threat or the tariff situation is doing some repricing oil a bit to the upside. Most likely it has to do with the Chinese tariffs, I would think. That's the only one I can think of is was the tariffed energy. So they're driving up energy prices on our end. I think this is short-lived, and you'll see, okay, fine, so they're trading back up again based on short-term news. Overall, as the longer-term approach takes effect and starts having an effect, this whole thing is going to come back down. in a big way. But at this point, we had to start off on the long side, looking to buy weakness, 72.90s, 72.50s for rotations back up. If the trade below 72.50s, we are back range bound again. And below the 71.70, let's start, then we start on the short side again. So still looking to buy strength, looking to buy weakness, 72.80s, 72.40 to 50s for rotations back up. Below 40s, take off the long bias. Below 71.75, start thinking short side of the market. So that's kind of the way I'm looking at oil. Not going to be very aggressive on the short side until we see them running into some resistance. They can run it all the way up here to 74.50 before we really run into good resistance here. So I'm just going to let that one run out of gas. So, but oil also surprising move, and what's driving it is most likely the tariff scenarios out there. But gold, man, look at that thing. Crazy stuff. Now they just opened the day session on gold. Let's see what they're going to do now. But this stuff is sometimes it's super tempting to trade gold like this. Just be mindful. It moves violently, and it just can absolutely chop you up. If you're on the right side of it, you'll be happy. If you're on the wrong side of it, you'll just be crying. All right, so back to the ES, and we kind of where we left it. Same with the Nasdaq. Nasdaq is probing that lower edge. So we'll see if Nasdaq start taking out that edge at the 21,720s. Or Nasdaq take out the 60-65. Definitely no long bias anymore. I didn't have it on the ES to get started. That's flat out range bound, but on the Nasdaq, I had that short, slight long bias on it. And if they start taking out the 720 to 30 on the Nasdaq, that take off that long bias right away. Alrighty, we'll wrap it there, guys. So no news really to drive the market until 10 when Jerome Powell speaks. So be mindful about that. Well, so Citi raises price target, but why? Why is it doing that? It's not like if you have inflation driving it lower. It's usually geopolitical stuff. It's just driving gold. It's not inflation related. Gold was a shitty inflation hedge, and it's it's usually geopolitical stuff, and the people are concerned about currency or financial systems or stuff like that. They run to gold, but you know. So it's there's some concern out there, financial. Physical demand. If that's the case, and yeah, if that's the case, it's a physical demand, then we're looking at these BRICS nation buying up gold. And that's what the reason was before. The BRICS nation alternative to the US dollar, they were buying up gold head over fist. We'll see if that is what's going on then. Alrighty. We'll leave it there. Good trading, guys. I'll see you back at 11:30 for the next update. All right, later.